Welcome folks, good evening. I'm doing weekly review on gold this weekly time frame. That's how I've been trading. Past weeks we have been on bullish on long trend on gold. You can see the movement. They have been bullish. Price have been trading long this movement. Down here to the up there. And here we close on last week, Friday. Market close, the forex market. You can see a fair value gap here. Is a fair value gap between this candle, the bullish candle. Look below the screen. Monday, 27 January 2005 candle. That's the candle, the high of it. Here is the high of it at the week. As price reached at fourth at that high. That's why I created the wick there and close here the body. Between the high and Monday 10th February candle, the low of it, no wick. You can see there's no wick there. There's no wick below. Market pump. So between the low of it at the body and the high of this candle, 27th January, there's a fair value gap and inefficiency. It's a void between the low of this candle and the high. You can see there's no other candle closed inside this space here, this gap. That's an inefficiency, a fair value gap. That's weekly BC buy side inefficiency, sell side imbalance. High. Buy side inefficiency, sell side imbalance, low. Weekly. Go over to daily. On daily chart. Here on daily, you can see price action creating another inefficiency right here between this bearish candle. Wednesday 19th February, the low of it, and Monday 17th February, the high of the week. It's another inefficiency. We have a high here resting above this candle. It's a high. The bearish candle is a low. Then we have a break above, creating this candle here, making it a higher high. The high here is higher than this high. Already we have a high and price creates a low and a higher high and drop. That's a break of structure. That's pure price action. If you are bullish, you anticipate such price action. Then trading above this high again, the previous high, which is this, as the previous high before price drop, taking the set side below with the body. The body will tell you the narrative. Then a higher high that break above the previous high. This candle here will not be a breaker. After a breaker, look for a fair value gap, a break above. A break above here. Then this candle, 19th February, the candle, that is this candle, the low of it is a candle that created this fair value gap between this 17th February. That's an inefficiency in the market. You can see on Friday, this Friday candle on daily chart. Last week, Friday, here we close. That was Friday close. Friday close. Where we close on last week, Friday. Where the body closed. We tell you the narrative. Then here's the week showing that price reached at 40 at the low here, taking out this SI liquidity. SI liquidity. It's like a Judas ring manipulation. Took it out, then went up again and closed right here on Friday. We have Friday high, where the week also reached out for price reached out for at the high resting above here by side liquidity. And we have the low of Friday side liquidity. So coming week, we anticipating price taking either the high first, coming to take the low of the Friday. That's the previous day high, low, which is Friday, and previous day high. Yeah, daily go back to 4 hours. Yeah, 4 hour time frame. You can see a clear and better price action here on 4 hour. This is the last close candle up here, the bullish candle there. Then we got a other block that's bearish candle that throw up a heavy candle, a longer, larger candle body covering the low of this bullish candle here as an other block. The last close candle, if you are bearish selling, we looking at for the last close candle, that's a bullish last close candle to stand as other block. Here is the next bullish close candle here. And we have here right here on Friday that took out the high of this, almost equal high, higher high. It's a higher high. You don't shade above it, so we're having a higher high here, equal high. So it's a high probability to sell equal high. We have an inversion here too. There's an inversion fair value gap. Prices have violated the BC, the buy side inefficiency, sell side imbalance. Once we have violated it, it now stands as a resistance. You can see the rejection block here, showing that here is a major resistance. Since we have violated the BC, the inefficiency here, this is the candle that violated the trade and closed below, trade below it and close, coming to it again. We have a rejection, first rejection block, a major resistance resting above here, other block here. You can see where the wick touch. Then the wick here is weak, trading at the other block main threshold, the half of it. That you can get the half of it. That's the main threshold on the low of the body to the high of the body. The line over there as the half of this other block main threshold. That's where the wick traded to. Have a higher high, equal high. We have a shoulder here, a high, a, a up A, have a higher high here, B, then another lower high. Price couldn't make another higher high to take out this high. Instead, price made a lower high, higher high, lower high. So coming next week, we are anticipating price selling short-term sell. Short-term sell, we have a sell liquidity resting above here. Friday low. Here is Friday low. Friday high here. Coming week, anticipating a displacement. We like price to take this candle here. Once that is done, we consider this candle as a breaker, as a bearish breaker. Is a bearish order block resting above the last close candle of the bullish, last close candle of the bullish last close candle. Coming to it again, a higher high, taking addition, minor high, the major high, taking at this minor high. We're having a high, low, higher high. We like to see a lower low here to take at this, then the displacement to take at this. Here becomes a breaker block. Then to deliver inside this inefficiency here between this candle over here, the wick, the low of it, and this bearish order block here, the high of it. We anchor from the high of that, draw to the high of the bearish candle there. You extend your line to your right side. Over here, I can change the color. Change the color over here. This seeing buy side inefficiency, sell side imbalance. So coming week, we are anticipating a delivery inside this BC. Also anticipating price taking this low, this candle, this low, the bearish candle there. Anticipating the displacement coming week, the low of this candle. Once price trade below it with the body and close, then this bearish candle becomes a bearish breaker. Once that is done, as 4-hour inversion fair value gap. This is a fair value gap here. Over here, we have a sell liquidity resting below. That should be our target coming week. It should not happen on Monday, Tuesday, opening price on Sunday, midnight opening price. So we're anticipating price taking the sell liquidity coming week first. As a weekly BC the high, having an inefficiency resting below here. If we look at price action, you see we have a higher high, price making higher high, break above, then coming over here, a lower high. You see the structure have changed, price action have changed. There's a change in price action, making a higher high, then a little higher high, not to that far distance high, then made another lower high instead of a higher high. So price action, is a change in price action here. So what we should be anticipating a displacement. We should be anticipating a displacement. High is a buy side liquidity, a higher buy side liquidity taken to buy side swap. Buy side liquidity swap. So we should be anticipating a displacement, a market shifting trust structure. Then utilizing this BC as an inversion for price to deliver inside it and drop to come and deliver inside this inefficiency coming week. Now this inefficiency here, I want to see magnet price coming week. We like to set short coming week here over here. That's for gold on gold chart. Okay, so that's great. Good. And check 1 hour. Yeah, 1 hour chart. Okay, great. That's nice. Love this. Have a little inefficiency here. Your price close. There was irritation. Yeah, there's more fair value gap there. There's more fair value gap there. Making a lower high. High, lower high. High, higher high. Lower high. A, B, C. A displacement. There's also a displacement. Low is low here. It has broken. So we have an inefficiency here too. We are price trade too. After a displacement, wait for a fair value gap. Inversion. Another inversion. There's an inversion between this bearish candle, the low of it, and the low of the high of this week, the bearish candle, the week of it. That's an inversion, fair value gap, acting as a resistance before price break above it, then coming to it again, it's testing it as a resistance inside it, and we're trading below it now, created a fair value gap, and to see price take this low. This low here, then take this. We have a set side liquidity resting below inefficiency, a breakaway gap, can be reclaimed. So coming week, let us see price fill the top, deliver inside it. As 1 hour chart, 1 hour inefficiency, 15 minutes. A 15 minutes chart here. Buy side liquidity taken 15 minutes. The displacement, then a fair value gap. I run into it. Institutional order flow, partial entry into the fair value gap. That's the fair value gap. CB. It's a side imbalance, buy side inefficiency. We're anticipating a short-term sell-off coming week. As for gold chart, for gold, this week is gonna be a profitable week. Gonna be an amazing week. Gonna be a great week. Yeah, gonna be a fruitful week too. Calm, peaceful week, successful week. So we prepare our mind mentally, refresh and recharge, and win. Meditate and stay grateful for the skill set you have. Okay, and challenge yourself to get better every day. Make sure you show up every day. Show up for yourself, do it for yourself. Everything is possible. You can challenge yourself no matter how many times you fail, you learn from your failures, from your mistakes. you take notes, you journal. Okay. Okay, you have a wonderful weekend and be safe. Thank you.